Yeah, I spent all this time searching for another life. Had me turning on my purpose, I did nothing right. Sometimes it takes the dark to get you close to light.
All right, what is up, guys? Good morning, happy Monday. And the light is really bright now. What is up? I hope you guys are doing well. We'll give it a minute for everyone else to join. Tell me you guys are in Euro GBP. Please tell me we all caught this thing. And if you look, this is the exact trade idea entry as it was sent. Obviously, I know the MA was hit, but it's still pretty gnarly to look at. I mean, you almost can't. It's crazy. I'm sorry. It still blows me out of the water sometimes with these, because obviously you're not intentionally trying. Like it was almost so on the point that if you copied the exact number, you either got half a pip of drawdown or you may have just missed. But if hopefully that's why I tried to highlight, the 4 hour 50 within, around that zone. 4 hour 50 was slightly above. So hopefully if you were looking at 4 hour 50, you're 100% would have got in. If you use trade idea entry, you should have also, been able to get in it. If you were a little more conservative and weighted, that would be another story. But following these coordinates with a 1 to 4, we had about an 18 pip stop. Ah, Rick. That one was good enough to put a limit order, but I know how it is. Like, even I feel some type of way when it comes to limit orders, and if I know I'm busy and I can't watch. But that Euro GBP, I was like, I know I mentioned, yeah, I said I was ready to take Euro GBP if it happens. Next day, it happens. I mean, hopefully, anybody who wanted to take it, I hope some of you guys got it. It was sent out in enough time. There was at least a day or two in advance. I know we talked about it for a while. It was a pair we've been talking about for a while, ever since we were trying to catch, since we had, I think it was multiple break evens that happened. We had one, two, and this was the third trade, all based around the same, pretty much the same, like daily, weekly moves that went on for both scenario for all of the trades that we've been looking at on Euro GBP. I was happy that touchback happened, man, because this pair's been giving us break even after break even, maybe a slight loss. Unless you were taking 1 to 2s, that one push up gave a really nice, maybe 1 to 2.5, almost 1 to 3. So yeah, overall Euro GBP was a good highlight. If you want to look at, it was a good setup to help enforce or really demonstrate daily, weekly move that's in motion. And it was beautiful because we caught the bottom, and then it made a new bottom. So we had those two entries that were at the low. And I do talk about, like, it's tough to be correct the first time on weekly setups, especially when you get to high time frames, because like I've talked about, one wick, a little wick on a weekly time frame can do a lot of damage. It can ease, you know what I mean? So it's tough to be really accurate. Euro GBP, look at that wick that came down was also pretty gnarly, and that's what had taken us out of that second and the entry off the 200 when it came down to do that slightly lower low and then popped up. But I'm happy that we touched back on the 4 hour 50. So at this point, you should be risk free. With an entry like this off the moving averages, off the, right close to 84,000. Another example of you can do a full stop loss to break even because we literally have an entry at the very low. So it's not one of those, this is a good example too of what happens if you have zero drawdown. You can literally put your stop, right there. Or if you want to do a pip or two just to cover the expense of swaps, commission, yada yada. Because if it does come all the way back to that level, we don't know if it's still going to be viable or still look good to take. We really wanted this push to break the previous highs, hopefully, and then that's what it needed to do in order to prove that it was bullish. But we're pretty much struggling at that resistance for now. And that's why I said if you're in it, put that stop loss to break even, trail it up, eliminate the risk, and at this point, you're literally at a 1 to 2.5. So you guys know the rules as well. I mean, if you, excuse me, wanted to take profit on that, you could take the 1 to 2.5 and call it a day. But it's just crazy, man. Like I still look at it and you would think I made this up. It's hard to try to tell somebody that this strategy gets you in moves like this time and time again, like really good. And the fact that we did it 3 times on this one pair within a month period or however long it was. I think the first one was the second week of May. then the third week of May, and then this one. Yeah, really nice, man. Nice how it ended up playing out. I specifically call out this pair as one of my favorites because of the quarter, because of how precise it moves in accordance with quarter points. And yeah, this is a nice one. All right. So Euro GBP active, trade idea hit. It's rolling, should be risk-free at this point. And we got several other. Let me check out USD CAD since you're specifically bringing it up. I saw that the dollars, we are seeing that dollar weakness continue. USD CAD. Okay, yeah, we had this highlighted, right? Daily divergence. 2.0 band happened. Now we reject it again. So you're going to stay away from the equal level low because we made a lower high and did not use that structure as there's really no, if you took the sell, the hidden divergence with the 50, that the sell was okay. Now you're looking at this, so you're looking at 4-hour 2.0 band. And honestly, this is going to be a struggle point if it plays out. But in order for USD CHF to happen, it looks like this guy's going to have to fail because then it would, dollar sinks lower. And then because USD CHF is not quite there yet. So we still need more dollar weakness for this one to happen. USD CHF, let's see, we're not bouncing off of any MA. We're bouncing off of weekly structure. So structure is still definitely bullish, but we have that weekly shark fin turning into divergence, have that daily 2.0 band. USD CAD has 4-hour 2.0 band. Daily, but the daily picture to me is nasty. It could still play up, but I really don't like how this looks because the 2.0 band touch already happened and then it came back and the bands are starting to get a little bit funky with that curve looking like we could sink. I would say USD CAD, my advice would be because the trade off of this same exact level already has played essentially, I would steer clear of it. And I would say maybe wait for the next high time frame move before getting back into it. Because high time frames definitely still like we're rejecting off the weekly 50. And that's what was a little different with USD CHF and USD CAD was what is dropping off of. With USD CAD, you have that hard rejection off the weekly 50. Then, I mean, the daily looked very similar on both pairs. I think both almost made a daily hidden divergence. Yeah, USD CHF I think has better in terms of what's going against it isn't as and the picture on the daily is not quite as bad. This looks pretty gnarly at the moment, USD CAD. 4-hour, 6-hour. But the daily is what's strong. I mean, the daily picture is not very nice. And I know if you go to certain time frames, you can start to you can start to justify things with other, but I try not to look at 6, 8, 12 unless the daily is a little, usually it's daily, weekly looks nice, 4-hour doesn't, then it's okay, let me take a look at that 6, 8, 12, but that's the only time I really even look at those time frames is if I'm already pretty interested because of the high time frames, and it just so happens that the 4 hour is not cooperating, which does happen at times. But we know if the 4-hour doesn't look nice, when you start messing with time frames like 1 over, 2 over, you end up with slightly different lines. If you know what I'm talking about, like the 4-hour 2.0 band might be here now, and then like a 5-hour or 3 hour is going to be slightly adjusted. And that's what I mean by just being careful about how you use those other time frames if you're using those other time frames. For most people, I'd say it can cause more harm than good, just because you could start pulling any time frame to justify something. So you just got to be careful with that. Like daily, weekly doesn't have. Weekly is going to look better a little bit lower, at least down to here, because we have a daily moving average lining up with a weekly Bollinger Band, not the pattern. So there's no Bollinger Band pattern, but there is weekly 2.0 band. There is definitely weekly structure around 1.36 thousand. So that's that quarter point. That's the weekly placement. Daily has the 800 moving average. Daily also has divergence. Might even be able to have a trend line that connects down to that moving average if you wanted it. And not to mention, this is a flip zone that was never retested. And, I have that I know, I think I talked about it a little bit last week. Like flip zones are funny, man, because the times like this, and this is going to be a perfect example. I'm telling you guys, don't bet the house on it, but like this was a very valid flip zone. When we look at this, let me take off the band so it's not as, you had support, you have resistance. This was the point in which trend flipped, but it never pulled back to retest this level of structure for buys. Beautiful area, right? And now we're seeing it come back. And there's a weekly 2.0 band, there's a daily 800, there's daily divergence. The weekly might even pop a shark fin. Maybe the way it's going. It's a little bit funky. It almost made shark fin. Like technically the weekly's doing a slight divergence if you want to get technical. Um, but I would say, yeah, I would say wait that tad bit lower or 1.36 because this will go in line with USD CHF now by waiting for a little bit more dollar weakness. A little more dollar weakness will trigger this one, and we need a little more dollar weakness for USD CHF. So it might add up in terms of other pairs. Like dollar weakness looks good, and then dollar strength is going to look real convenient for both of these once it gets a little bit lower. So that picture it makes sense that we're seeing that we could see a little bit more weakness. But that's my take on it. I said 6 and 8 time frames aren't my go-to, aren't they're literally into my head like a backup. And it's like I said, with daily, weekly, very promising, 4 hour not so good. That's when we start. But you really want to make sure that that daily, weekly makes sense if you're going to start pulling from other time frames. But I know you guys. I'm sure a lot of you guys know that. But it just from what I saw with Derek and then me being in the middle of it, because like we both taught, and then I had people using those time frames, so even that period, I just saw the kind of mess that it created. And it was big on him, he was big on using like 2 hour, 2 day, 3 day. Like it got funky, man. Like to the point, like you can't explain that to a new person that like you just pull whatever time frame moving average you want. You have to have a better system. And I just remember from that era that it was pretty bad. The trend line thing that he was trying, and then his way with the different time frames, I think rubbed a lot of people the wrong way and confused the crap out of people. So that's why I say like use that daily weekly as your primary reason for entering anything. Like as far as area of interest. Okay, structure, moving average, there you go. Weekly structure going with the trend, or if you're going counter trend, you want Bollinger Band divergence with structure, ideally. All right, so we are still honed in 81,000. 4 hour is going to give us, so it shouldn't happen. Hopefully, we don't get a steep drop. Because we know what would be perfect is if our 4 hour lines up right down here as well. In a perfect world, that's what we want to see. There's still some time. I mean, the way things are going, I don't know if we'll end up getting some. It would have to end up dropping slowly in order for the bands to drop down, curve. But if we drop fast, look how close we are to being a shark fin already. This can 100% develop into a shark fin. 70 pip drop would put us right there. And we already have the trade is pretty much already set in place due to the daily and the weekly, having the confluence at that spot. So this would be a good example. If the 4 hour does look nasty, we can definitely look at that 6, look at the 8, maybe the 12, and see, if that can help with a Bollinger Bands or additional shark fin divergence, even our 1 hour. Yeah, I still like this. And I think last week we sent Euro GBP, we sent AJ. AJ went the opposite way, so I don't think I really need to reiterate. That one's a bit further away now that it flopped in the other direction. The gold one, okay. When I'm checking, I just wanted to see how long it's been since I sent the USD CHF because I'll send it again with roughly similar coordinates, right? 40 pip stop. Might have to do a slightly earlier entry or so, but this can still easily be 1 to 4, even if we do 50 pip stop. And then on this USD CHF, if this starts to rise and we're correct that the trend is going to flip, the real daily/weekly flip zone is where our TP is. So we might be able to get this trade to play out 1 to 4, whatever the case, and then there'll be that additional trade if that weekly can puncture through zero, what is that? 83,500? Just double check. Yep, that is the spot. That is going to be the real flip zone I mean, 'cause that's a high time, and was still going to take it up to the 50. Literally the exact same game plan that we had been looking at about a month ago when we were in that spot. But it was interesting to see because it was the worst case scenario. It ended up being a wick, candle closed inside, barely inside of the actual zone that you had wanted to see it in. And then we dropped out. And this is good reference why I follow or why I have the methodology of do not consider a break unless you have that full candle open close without touching the zone, the MA, the band, whatever confluence it is you're talking about, because wick outs happen. The best way is to let that candle close, and then you need the next candle. So not the puncture candle, but then you need the one additional that's completely through the zone that lets you know, okay, this is broken, it's confirmed. Because if you don't, this is definitely, what can happen. So our weekly isn't quite ready to flip on USD CHF because we're literally straight down on the pretty vertical with the bands, but there is at least TDI to assist. And then, we have the daily to go along with it to help as well. So this, looking for, I just don't want to make the picture too protect zone, still roughly in that spot. That would be what, about 60 pips in profit at least. We might end up protecting earlier. It's going to depend on everything that's going on in that spot. Based on daily, that's definitely the spot that looks like where you first will run into an issue. All right, so let's get this one out since we are still eyeballing this. And this will go in line with USD CAD if it drops as well. So for anyone who liked USD CAD better, you could definitely take it as an alternative. Let's trade. I don't know that. Got that USD CHF. All right, now let's skim across. I'm going to do what tabs we left open from last week and then look at some of the newer stuff or see what's changed. NZD USD, we had been waiting for break and retest to the downside. Obviously, that didn't happen. We are now in the opposite direction. This is definitely breakout about to happen. Multiple touches at resistance, higher low, higher low, higher low, pushing into equal level high. That is a recipe for a breakout. What makes it enticing is the fact that there's a moving average right there. Will you wait for a lower time frame shark fin on USD CHF? No, not necessarily. Because if daily weekly is already in place, all I'm really looking for is that additional, whether it's the 4 hour, it's gonna, because like I said, I'm pretty much set to take this. What I would like to is definitely 4 hour to give something, whether it's shark fin, whether it's diverge. If 4 hour is shark fin, then we know we can look at the 30-minute and the 1 hour to see the divergence unfold with the bands. But we have our entry point relatively identified for the most part. Maybe we could take it a little bit earlier if the low time, like I said, if we see 4 hour shark fin develop and then 30-minute bands give us that 2.0 entry and it's a tad bit higher, I would say take that. Because we know with those daily weeklies, they don't always hit the actual confluence, right? It might look like it comes close, but if I see that entry given on another setup, like that exact scenario of the 4 hour and the 30-minute giving you the entry for the 4 hour shark fin, I would say we could go with that. So roughly, this is going to be the trade idea, and we won't really know quite how those low time frames look till we get a little bit closer. Like obviously we do have low time frame shark fins that already occurred. So like the 30-minute created a shark fin, the 1 hour created. So this is good because we already know what shark fins set up, right? Failed shark fin turns into divergence. We'll have to see that divergence stretch a little bit. We need to see another 60, 70 pip drop, but it's always good that you start to see the shark fins unfold when you're a little bit of distance away. Because in your head, you could probably already start to play it out, what you see. You look at other examples too. It's like you get the shark fin, then it inches a little bit higher, makes diverge. So in our heads, that's exactly what I'm looking at. It's nice to see that. 4 hour is getting close to making a shark fin. 1 hour, 30-minute already have their shark fin ready. So literally we drop divergence, is either created or whatever you want to call it, reinforced, another low, double, triple divergence. But at least we have the shark fins already established, you know? And literally the shark fins happened like only 50, 60 pips away from the ideal entry spot. So if we do end up seeing a lower time frame entry, I'll definitely point it out, you know, Marshall. Like I wouldn't like sneakily take it and then have everyone still waiting on the separate trade. I'll definitely update with a signal entry. If I'm gonna follow separate coordinates, I will definitely let you guys know. Definitely. All right, so we got this one. We said NU. Yes, no worries. So, because it would be nice if the low time frames cooperate, you know, and hopefully they will. NU is on its way to the 200. So I would steer clear of that sell on the daily that we were just potentially looking at. And I think, yep, again, this is also what happened on USD CAD. In terms of NZD USD, already tapped. This was your 2.0 band tap. Obviously, you missed by a hair, but you get the gist. The band did the pattern, shark fin. Oh, it actually just didn't make a shark fin, but you have the technical divergence and the Bollinger Bands to help. So this was that sell, essentially. And it's that example of price reacted a little bit less, a little bit under from where you wanted it. Would you still take the trade? If it made a higher low going against you, I'd say stay the heck away from it. Especially because the weekly is doing its own thing as well. Weekly broke the 50, retested the 50, and now it rockets to the next moving average, like a break and retest of the 50 does. In most instances, break retest of the 50 gets you, if the trend continues, you get to that next moving average. And really, there's nothing else in the way on the daily, except once that 800 is cleared, there's nothing on the daily to stop it from rising up towards that weekly MA as well. What could happen is potential continuation buys at this spot because we have the daily 800. That guy's not going to move too much because it's an 800-day moving average. So it's going to be relatively in that same spot. So the break and retest, we will get structure. We would get the daily 800. We would also be able to identify that structure on the weekly. And so that buy, if we end up being able to get it, we would buy up to the 200 on the weekly. That looks like to be where we're heading. So actually, if we just, this is kind of what we would want to see then. Bounce, bounce, and take it up to here. Right around 62,000. Right? Very easy with quarter point placements. A lot of times, you know, you look at where the MA is, you look at where structure is, you notice it's 62,150. And you're like, okay, very simple. You just round it down. And now you know that 62,000, that's still on the high end because that's in wick territory of that zone of structure. So obviously if your MA comes a little bit down, or you could still enter potentially even at a 750 quarter point underneath, all depending on how it all lines up, especially like this could be a good example too. If your 4-hour gives you a divergence and 2.0 band under that, you can definitely take it. When you're just a smidge away, and that's the same example like we're talking about for USD CHF. We're a smidge up where the lower time frames line up, and we still have all this daily, weekly looking clear with the structure. You're fine to take that, you know. And there's a lot of times it's funny how sometimes literally you'll get a 15-minute, 5-minute entry on a weekly move, but that's just because it went down the line. Weekly's in position, daily's in position, 4-hour, boom, 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 and sometimes you literally see it unfold all the way to the lowest of time frames. Beautiful if that happens. But if you guys ever watched the trade ideas I have on YouTube, like some of those trade ideas, I definitely did some on intentionally that lined up really well like that. So you can see like that stuff does actually happen where you will see monthly, weekly, daily, 4-hour, 1-hour, 30-minute. There's at least a handful of those trade ideas or trade breakdowns I've done on YouTube where you literally see every single time frame going in place. And then you're like, okay, this is why there's such high win rate if you wait for all that to be present. But obviously there's some give and take because you'll be sitting around for a while if you're waiting for daily, weekly, monthly waiting for all of it to line up. So I like that USD CHF plan. And this, so let's see, NZD USD buys. That means NZD strength, USD weakness. And we want to see USD strength flip around. You know what? This might end up having a little pullback, but I wouldn't say it's not going to be good enough. I wouldn't say to take this. Like your 4 hours is very ugly at this point. In terms of it's starting to slide through the bands. 50 MA pushing it up. I would not try to sell this. I know sometimes those moving averages near resistance can look enticing, but again, when it comes to counter trend scenarios, you got to be really careful. More careful than trend continuation. So I would say NU can definitely get scratched off the radar. We would only want to be taking continuation buys on something like that. And like I think it's a similar for Euro USD, GBP USD. GU, I know some of you guys took that, right? I remember from last week, there were some of you guys who took 1.34500 was that quarter point. Even the 250 spot was hit. And where you saw 4 hour 50 hidden divergence, giving you that entry right around. It was daily structure, break retest of daily structure going with the trend. And there was a 4 hour 50 with hidden divergence there. Plus, you literally, I think, could pull a trend line up the lows if you wanted to make it line up there. But yeah, this was another good example, right? Not just structure, but high time frame structure accompanied by a 4 hour hidden divergence with the 50 for entry. Nice. That was probably you. There might have been a couple of you guys that had caught that. I was a little weary because I hate buying into higher highs. I always have that. Even though it looks good at this point, like GU's been super bullish, super bullish. There's that other trade idea from a while back, was from back over here on that pullback from the weekly, on the weekly and the daily. That was the one that really sent things launching. At this point, I mean, GU, you honestly, you guys could probably swing the crap out of that thing, to be honest. Like I'm looking at this on the week because we like broke into no man's land in terms of once we broke that resistance from earlier in 2024, it's been over 2 years since we've seen this level reached before, right? Last time was February 22 is the last time we've been where we're at now. Significant breakout in terms of structure. Your weekly has no TDI going supporting a sell. Bollinger Bands do not support the sell at this point. They are slanted up. We're past, 2.0 band did its thing. It tried. It did pull back quite a bit. And, we pretty much literally recovered from that. Your monthly in full out breakout mode, right? Resistance level just broken. New candle just breaking to the upside. So you're getting like that confirmation candle with that breakout. And yeah, I mean, this looks like clear sailing, man. So if anyone's still in GU, I don't know if you guys already took profit, took partials, whatever the case, because it's already coming into like TP territory if you wanted to TP. But there's definitely this chance that this thing might go up another 500. Like that's big distance, right? In terms of structure, that makes sense. Let me see on the daily how that structure on the monthly looks, but on the daily, if we slide over. Yeah, you don't have other significant levels of resistance, besides this spot that's sticking out with the week. Okay. Yeah, it's the weekly 800. That's a tad bit under where that structure point is. But like that is definitely 1.3. Yeah, you got another 400 pips. So I mean, just something to consider. Like that's something where like if you were taking this on a challenge account and you were trying, like you could try to milk the crap out of that. And it makes sense. It's not like you're doing something unreasonable. Sure, you could take that 1 to 2, 1 to 3, but that's one of those things that like, hey, if this goes the way it's going, there's a good chance you can really nail the risk to reward. Get a 1 to whatever the heck, 1 to 5, 1 to 6. Probably even better. I mean, I'm assuming you probably hit it with a 40, 30, 40, 50 pip stop. So to potentially catch 600 pips is ridiculous. That's a challenge passing trade. And that's what I advise people to do is with those prop firm challenges, you don't want to take unnecessary trades at all because any unnecessary trade is literally going to bump you in losses. Unnecessary losses are just not fun, especially in the beginning of the challenge when you're trying to get your head above water and get yourself in the green so you have a little bit of wiggle room. Like that first trade, you really want to wait for the best, have it look fantastic. So there's a very good chance you're at least going to get break even or a TP on your first trade. And to tell you the truth, I don't think there's been many out of all the prop firm challenges, most of them, the times where I said I'm going to wait and only start my challenge with the best possible trade, the times I followed that, almost every time it was literally starting off the challenge now with 2R, 3R, 4R, halfway through the phase one, just by waiting instead of back and forth, constant trades, but literally saying, you know what, we're only trying to swing to win. So, and the same thing goes when it becomes a live account. You do not want to take the iffy trades. It's not about swinging at every possible opportunity because that will not end well. It's not about, it's only about taking the ones that are almost, I know we say nothing's a positive in trading, but in the same sense, you're not trying to enter a trade unless there's a very good chance it's going to work out. Otherwise, why the heck do you take it? We have a system that has many moving parts, and therefore there's super high probability if you have all those components present, you know? And it's like, it's definitely worth the wait to start your challenge. Get the challenge, you know what I mean? Wait for that best setup, best one possible. Literally say, like, I'm not going to start my challenge off with anything besides a win or a break even. So you're only trying to take the absolute best of the best. No 4 hour with nothing on the daily, no daily with nothing on the weekly, nothing on the four, like where you're trying to slide by. You really want to take that serious because you have to consider, like, your mentality with the prop firm challenge is really what's setting you up for that funded account. And if you trade if with shitty habits in your challenge, the shitty habits will be right there and you're funded. Don't know how many times, not so much with people I've worked with, but very much so with my personal experience. You know, it definitely should be a general rule to do that. This strategy really enforces that because we have a system in which if you have a if you're using confluences properly, you shouldn't be able to even find trades that fill the criteria that often. There really isn't. You know, the ones that, you know, line up really well, there's maybe a couple of them a week. Couple might happen while you're asleep. Couple might you miss because of work. You know what I mean? So they're there. It's just hard to always catch all of them, but definitely worth the wait. If it's your first trade on the challenge, if it's your funded account, you swing to win. You're not swinging to play around with your strategy. You know what I mean? It's a really serious thing because a prop firm account will change your life if you treat it properly. The problem is with so many people in trading, when you trade for years and have no progress and no real money, what's the word? It desensitizes. That's the word. You become desensitized to the numbers. Yo, Rick, that is actually awesome. So you passed that challenge because I remember wasn't this like a week or 2 weeks ago that you were -5, that you were down 4 or 5%. Oh, nice. Okay, one from nice. So you brought it right. Did you just do that with wins, or did you even have any losses on your recovery journey from negative to positive? That's awesome, man. That is the spirit. And the best thing to do when you do get stuck in a hole like that, like if you made a couple, you know, not so great trades and you dig yourself a little, the best thing you could do is literally pause and get in that same mindset of like, what the heck am I doing? Why am I taking these? Recenter, regroup. So you know what? If I do this properly, 1 or 2 trades can get me out of the red. But if I start digging deeper, you know, that's awesome, man. And that's a Forex or is that futures? I'm guessing Forex because futures, I don't think they let you go -5. Futures, you can only go to like -2% and then it blows the account. I think 2 or 3% drawdown is like the most you have. Unless you have profit money. If you have profit, then you fluff your account and they let you play with your wins, basically. Gotcha. Okay, so what company, if you don't mind me asking? You can have so 10% max drawdown. That sounds pretty standard. Hopefully, it's with a decent firm. And then yeah, it's interesting, man. Like this is definitely want to talk to you more about it. Funding. Have you gotten paid out from them before? Or is this like one of your first funded accounts? We could talk more. I mean, you don't have to throw everything out there if you don't want. Not yet, but the reviews are okay. So it's like you just got funded with them recently. That's an amazing comeback, man. And you don't ever want to get to -5% again on a funded because I know what that stress is like. Like it is not fun, especially if you only have one funded account. And then it's like if it's your first one, Yeah, don't make the mistake that so many of us have done by getting funded and blow the funded right away. The first couple funded accounts, it's exactly what happened with me. I think the very first funded account I had lasted about 2 days, and I think the first day I hit like -4%, and the next day just finished it. And I just remember it was like like a car passing by. You know what? It felt like I worked on something for a month or two. Car flies by, and it's like the account's gone, and I was like. Just need to not give a. Yep, yep. The desensitizing thing I feel is much worse for people who've been trading. For the longer you've been trading, the longer you've been seeing numbers go by and not real and not money in your pocket. That I think it really gets decent, and then it becomes harder for people who've been trying to be profitable for so many years because it's stressful, man. I can only imagine like hitting 5, 6 years and not really seeing money. It can definitely, even just from the time, I can honestly say I wasted about a year in the beginning when I first learned trading by playing around and not taking it serious. But then from when I took it serious, it took me about 10, 12 months to start making money, get funded, keep my funded account. Yeah, so like the desensitization thing, I feel that's where the mentor really comes in because there's so many things that somebody who's trading on their own and has not experienced on that funded journey that say somebody who's been funded for years or like my example, I first funded account was like 2022 or 2020, and then I've gotten payouts from a total of 7 or 8 different prop firms, like been funded with 8 or 9 in total, and like you're able to give that type. But if you're trading with your buddies and sometimes you just can't get that type of advice. And sometimes you've got the buddies who are like, "Hey man, you're funded now. Let's try to get a car." You know what I mean? It's like, let's try to get a 20K payout. You could get a car, you could get a house, and then next thing you know, you have all the hopes and dreams. I just try to tell people, man, you literally have to look at it as a career, not like this get rich quick to try to make the most of it. Like literally again, it's better to make a solid 1-2% every single month than either make 7% or nothing, 7% or -5, and be in that range, or would you rather always be in that -1 or +1, 2, 3? And if you use low risk, you'll end up in that range. And I think it was the other week, Rick, I was saying to you like how I just under leveraged the crap out of my funded accounts, and those were the only times in which I had longevity with a funded account. When I stayed around that like 1%, 1.5, like started to mess with those type of numbers, the accounts didn't last nearly as long. But the times I really had good runs with prop was when I was literally doing that 0.25, 0.20. I was literally staying between 0.15 and 0.35, maybe like third of a percent was the most I was going. But you can imagine the worst drawdown I ever saw was maybe 1%, because 3 bad trades at a third of a percent each is 1% drawdown. And then one good trade at a 1 to 3 gets you out of that drawdown. And it's a lot less stressful than going 3, 5% negative. What was the most drawdown you can each company, each firm is different. Or are you referring to unfunded accounts? I mean, I'm trying to think. Honestly, when I was doing the consistent, steady, low risk, like I call it under leveraging, but honestly, it's a really smart way to trade because you're guaranteeing that you're not going to lose your account when you trade that small, and you're only trading once, twice a week at third percent risk. The thing is, what you want to do is guarantee a source of income. It's not about how much you make, but it's about can you make it consistent because you can scale consistency. You can't scale something that blows up every other week because of the insane risk that's used. You know what I mean? So the scalability, you can really, if you can keep that drawdown under 1, 2, 3%, and you can, rally your payouts 1, 2, 3% as well, like you're in a good boat where you can multiply the crap out of that. You get another account, do the same thing. You don't even have to ever raise your risk. You just go from a 50K funded, you know what I mean, maintain it, then you get 200K, another 200K, and you don't have to start doing, you know what I mean? You don't have to revise your game plan. And like that's what I had done. Like once I had almost blown I had 100K in the beginning, and I had that for maybe 9 months or so at TFT. But there was a point in which I got into a hole and that was when I was doing 1% risk per trade. And then you have a couple bad trades, you double down on a couple, right? Stop loss entry, and next thing I know, 4 or 5% drawdown, and getting out of. And I just never, like I said, I had the experience of finally getting funded, doing really well, and then almost losing that account. And that was when I was like, you know what? Because that was my main source of income. Like trading was my has been main source for I think 2 years, going on 2 years. The other sources of income are great, but primarily like, and that's why I had to lower the risk because I realized that I needed the consistency. I didn't need the, oh, 1 week I get paid, 1 week I don't, and it's blown. I got to wait 2 months to get funded again. I realized like you can't play around. If you're this is what you want to do for a living and a career, yeah, you literally have to under lever. I don't even call it under leveraging. It's just if you want to call it a smart way to trade, a way to trade in which you're guaranteed you're not going to blow your account. If slippage happens, what is it going to do? When you're using third percent risk, you can get slipped right to your stop loss and it's not going to be that bad. But you start messing with high risk and it's like the conditions around high risk are just, there's so much that could go wrong. The prop firm can screw you over and you don't want to put yourself in a position where a prop firm could do something like that, right? You throw 20, 30 lots on it and all it takes is, you know what I mean? A little slip. You hit the close button, it slips you by a couple extra pips. You think that you're closing at 4.5% drawdown, instead it just hits 5. Like things like that happen all the time. And you don't know if it was real, did the prop, you'll never win that argument against them either. They could do whatever they want because you sign an agreement that literally says they could do whatever they want. And it's like, so you really have to follow rules with prop firms. You'll never win in an argument or trying to fight back if you've lost your account. Because most of the times you lose your account by doing something relatively irresponsible. The over leverage it, like, the ways that it happens. Like I said, what did I used to say? I used to say, if you know the game that the prop firm could be playing, it's not about like thinking everyone's out to get you, but it's the fact that it could happen. You could get slipped and you would have no clue if it was the real market, was it the prop firm? So why put yourself in a position to use high or to ever mess around 4% drawdown? Don't play the game of like, I'm going to put a stop that's going to cut me out at 4.5%. Because like I said, all it takes is a little bit of a slip. A commission fee was higher than you thought. Like you really don't want to play around in the gray water, the edge of the cliff, I guess you could call it. Like you want to fly under the radar. You don't want to be the guy that the prop firms are like, who the heck is this guy making 100K payout? Like, you fly under the radar, you do your consistent couple percent, and with the right amount of funding, that couple percent will literally be the most money you've ever made in your life. Like I went from other careers, other jobs, making a couple thousand a month because I never had I wouldn't even call it a career. I had bullshit jobs most of my life, a couple thousand, and then getting into trading and then seeing like 5,000, 8,000, 10,000 things that in the real world with somebody like me who has a criminal record and it's, a bunch of kids, my scheduling is crazy. Trading is just such a good opportunity overall for anyone who's a parent, anybody who like, there's so many people that it's just, you could be retired and it's you don't have to go to work. You can do that. You have to take it serious. Like that level of freedom doesn't come without difficulty, right? That's how you have to look at it too. Again, if it was so easy, everybody would do it. If it was easy to master your emotions, everybody would be a master of their emotions, right? Nobody would lose their cool. Nobody would be road rage. You would punch people in the face when you're mad. Like let the type of like self mastery that's required to be a consistently profit. And it's tough, man. You go through phases where it's you stumble at times and like I don't try to cover. I've had times where I've messed up over the last couple of years. I've had times where I went a little too heavy thinking that the trade was good. It happens. It's worse for people who try to act like that doesn't happen. If you're still within your first 5, 6 years of trading, you're still, even though you might be profitable, like I would definitely still consider, but I had times where I made silly mistakes. I had times where like did things that I shouldn't, even at the level of being funded with over 1 million in funding. And it's not easy is what I'm trying to say. You always have to be paying attention to yourself, your emotions, things in your personal life because it bleeds right into what you're doing. Just like any career, right? Like you take your stuff from home. If it's not handled, you end up taking it with you everywhere you go. Everyone you talk to ends up. And so, yeah, I had periods of time, like roughly a year ago, 6 months ago or so, like going through and it was just a very tough time to trade. It's real, man. I'm definitely this week. I have plans to get back on like it's been like 9 months since I made a YouTube video, or almost a year. Like I went through a real tough patch of life. moved again, like all, and then, last couple months, everything kind of getting back on track. But like, I have no shit. And like, I was actually almost excited to like talk about it, whether it's podcast, YouTube video, whatever format it is. But it's the real life stuff. And I've always liked that about my content or just about how I am as in this field as somebody who tries to be as transparent as possible, right? Like when I passed firms, like I try to show the certificates, show the payouts, never don't hide, don't delete, because it's real life. Like I loved it when we have those examples too, and I call them real life scenarios where the wick comes, takes you out at the worst, and you're like that stuff happens. Not everything looks perfect in trading, as much as the examples and the course can make things look simple. That's not what it looks like in real life. Trading, it's not like you get funded and now all of a sudden you'll just be making money. You still have to deal with the same, yeah, like you go through waves just like anything in life, but it gets tough. It definitely will get, you have times it seems really easy, really flawless, and then times where market could be going through some stuff, you could be going through some stuff. And it's crazy what the mind can do, man. The mind is a crazy thing. I think I was in that much wrong because I got my funded account. When I get my fund, I feel like I had to. Yeah, that and I try to and always enforce with people like don't trade your challenge crazy because like we were saying like those habits get carried on. It's not a switch, and I used to think it was a freaking switch. I used to say I'm gonna try to pass this challenge in 2 days, and when I'm funded, I'm gonna flip the switch and go back to being a disciplined trader. And I can promise you the times that I did challenges recklessly, it literally carries with you because like I said, your mind will start to tell you, well, look, you just passed that challenge in 2 days. Why the heck are you going to lower? Now you're going to go to 0.25 risk after you just made 10% in 2 days. You know what I mean? It's so easy. And then you talk yourself into it. Oh, what could I buy with a 10% payout? And then you end up with nothing. And so that's why I always tell people, man, like take that 2% or 2R, 2.5R. If it's a funded account, it's a Friday. Like take the profit that you can. Nice, man. So that's what I tell people is don't go past 1% risk on a challenge. And then when you're funded, you still have to kind of diet down a little bit, regardless of how long it takes you to pass. Like I said, just the fact of being consistently paid is it's not about how much or certain numbers. You literally just need to get to a payout. However much, whether it's $5, $50, you need to break the statistic, right? And the statistic is how most people who get funded lose the funded without ever getting a payout. So you got to break that. If that means you can only trade 2 days a month, like you make your 1 or 2% in one trade, as hard as it is, trust me when I say like you are better off just not hold it down and guarantee you get your first payout. If it's your first day on a funded account, you made a couple percent, it's a beautiful thing. You don't have to go and even risk it ever. You can literally say, the 3,000 I just made my first day, first week of being funded, I'm gonna get paid. I don't care. I don't have to trade more. Like there's no stress unless you have a prop firm that has silly rules where you have to trade a certain amount. Yep. Yeah, T, that was my experience, man. When I was funded 1.2 million, and even before when I was 600K, when I all the way once I really had that 100K and then I did my 500K in challenges at the same, that was really when like I got into the whole and I was doing podcasts around that time as well. And yeah, that's when I just realized people don't like to hear that, the low risk. But again, it's not supposed to be an exhilarated, it's not skydiving. It's not supposed to feel like skydiving. Like I said, it's literally a career. It's a way you can make a living and it has to be taken seriously. So as much emotion as you can take out of things is better. The big numbers, and the prop firms try to suck you in by showing you the people who get the big payouts. You ever notice that if a prop firm was really on your side, you know which people they would be interviewing? The people who've had a funded account the longest. That's who you want to hear from. You don't want to hear from, no offense to anyone that's been in that position, but like a Joe Schmo who got funded and got a 70K, 80K payout, blew it, and then didn't get funded again. You never hear this guy again. Like there's so many people that have done that. Like the one and done, you have artists that are like one hit wonders, right? And a lot of those prop firm interviews with guys who got big payouts, a lot of them were one hit wonders where they did that one big payout. And then you know how many times they must have tried to get back to that same spot and then couldn't because that stuff doesn't happen every day, like 80K, 100K on a 200K or 300K account is insane. Definitely not something that can be replicated. That's why you don't see those same people with consistent payouts like that. The real people that you want to hear podcast interviews from are people with longevity, because anybody can throw 30 lots, 20 and one trade play out. When you look at what it took somebody to get a big payout like that, a lot of times all it is completely over leveraged on one move that ended up going their way, but they fully loaded on it the whole time, stacking into it. And it just so happened. So it's, what's more impressive? Somebody who just, stacked into it and we want one trade worked out in their favor, or somebody who can trade consistently for 8 months, 10 months, 12 months. Anyone can have one good trade go their way, but how many people can manage their emotions for a whole year? You know what I mean? Like that's where you know that the prop firm marketing is not in favor of the trader, because they just want you to see, oh, you can make big money like this guy did. You should try, right? That's almost how it is. And that's what they try to show, is all these big payout interviews. I just remember seeing all of those, and it was hard. I tried to do a TFT interview, and it was so hard to get on with it. It was like the runner, and I look back and I was like, my biggest payout with them was like maybe 11 or 12,000. Like, it wasn't a big number, and I almost wonder if they were just looking for people who had massive payouts. Because this was around the time when, yeah, everyone was doing these, people were doing 50K, 100K. Yep, yep. The slow consistency gave you more confidence as well. Yeah, man, I went all of last year pretty much with my largest payout never being more than 3%. Smaller, and there were some months on certain accounts I didn't really make much, but I can literally almost promise that you're much more guaranteed to get a payout when you do that low risk like that. Anything under 1% is really good. 0.25. If it's your first payout, like I said, beat the statistic. Go one, you can go 0.10%. You know what? Like I said, just the fact of you getting a payout, your first payout, already puts you in the 3%, the top 3% of traders who actually can get a payout after, you know what I mean? So that's what I mean by just, you have to do something different than what everybody else who's failing is doing. Everyone else is doing 1%, 2%, crappy strategies. We're in a different boat. Literally teach the opposite of what's mainstream, right? Mainstream is ICT, price action, no indicators, big risk, big payouts, money flipping or flipping accounts, 1,000 to 50,000. That's what's mainstream. And it's no wonder that 95% of traders are not making it, because that's what, people are being fed. Or I guess that's what people are going after or attracted to. Yeah, my largest payout ever was 23, 24,000. But that was on a 500K account. So like I said, I really never hit payouts more. I have one or two payouts that were like 4, 5, 6%, but all of last year it was literally 1, 2, or 3%. But with the right funding, when you're 1.2 million funded, it wasn't that, the 1 or 2%. I tell you, how hard is it to make 1% a month if somebody asks you? But how many people can actually achieve 1% a month for an extended period of time? That would actually put you in a really good bracket. If you do 12% a year consistently, even in hedge fund terms, the consistency is, again, what investors, if you go the route of trading for people, and my experience with investors and large money is they don't want to see high risk. They don't care if that means they're only going to see 1, 2% a month. They would rather see that, but know that there are 200,000, 500,000 is safe and not getting tossed around left and right. I could definitely tell you that. And so, yeah, the lower getting adjusted to low, and that's what led me. It really opened the door to trading for investors, because I became so accustomed to that really low risk. It was so easy to get into the flow of going from prop firms to trading for private investors, because I already had that extensive history of trading with the rule set, having to follow that rule set, and staying within the tight restrictions of risk. And yeah, it literally sets you up in terms of if you want to go the route of hedge fund or private, and trading for people. That's the way that you have to trade. The account flipping stuff is more gimmicky than anything, and it's definitely not the route to go. Like I said, don't try to be the one hit wonder of trying to flip the last $100 every time to, don't rely on luck. You know what I mean? You want to put skill into it. You want it to where it comes down to your skill and education, trading education, more so than the luck of just one trade that needs to go your way. Yeah, Marshall, I hear. That's why I say, man, prop firms are such a life-changing opportunity. Like you don't even have to get to this million, 2 million, but even just having a funded account, like it's just a source of income to make a couple percent a month that it won't take you long to replace the income that you make at your job. It really won't. Even because your first account's going to be small, most likely, and then from that one, you use the funds after a couple months to get the bigger one. And so within the period, by the time you get funded and get paid out, you should have a good enough head where, in 2, 3 months, whatever period of time you want to really tell yourself like, okay, I'm ready and get that 200K, 100K and be like, this is where my career really starts. The smaller accounts, the stepping stone to build the mentality that you need, and then it gets taken to that next level when you get multiple accounts, large accounts. But you have to be in the right headspace. And I've been on the other side of it where you just try to get funded with a big account out of the boat, and it will put you in a financial hole if you're constantly blowing 1,000 on 100 or 200K accounts or so it's when you're in the phase of still losing money and not definitely you want to be messing around on the smaller accounts. That's the other word of advice. You don't want it to be too small. Like if you live in the US, right? I would say 50K for me, and I think for most people, like that was a number where it wasn't too large, where, okay, if I lost the account, it's $250. Not a huge, it's enough to take it serious. And if you get funded, you're like, okay, if I get my payouts are going to look like 1,000, 1,500 maybe, which is good as a starting point. That's a beautiful starting point for someone who. Yeah, that was you. Yeah, exactly. Yep, and that it's definitely life-changing, man, and it should be treated as such. And I hate that being desensitized really takes that away, that you don't realize just what you have in your hands when you get funded, like the power that you're holding within your hands and the power of that skill set. It's great, but it's awesome to hear, man, Rick. Definitely. This is like podcast material, like hopefully I look forward to it if you want, especially like get that payout and like it's a great story that for people to hear. And it's legit, it's real. You know what I mean? You got a hole on your first funded account, went into the hole, got yourself ah we'll see. You might need a Google translator. You have like the robot translating everything. I definitely want to do that this year. If people, you can reach out to me because obviously I don't know everyone's store where everyone is at, but if you're somebody who's definitely having some success, especially with this, anything you've learned from me where we can get on and like talk about it and talk about what changed, regardless of the role I played. Like some people, they just picked up one thing, two things, the indicators, the whatever, the way I do structure, flip zone, certain things. But just trading, like I really like to, I think the best time to talk about it is when you just go through it. Like I said, it's different to listen to somebody like Burns, if you guys for Burns Scorpions, who's been trading for 10, 15 years. Well, longer than he's been profitable for 10 plus years. But his perspective is literally coming from it's like those Shaolin monks. Like he's at Shaolin monk stage, and a lot of people can't relate to that level. Like his stuff is pretty advanced, but you can tell he's been doing this for a while, and versus somebody who's just going through it. And that's what I liked about when I did my round of podcasts with people last year. It was in the year before that, it was right as I was having that breakthrough. So it was so fresh and I was so passionate about it because again, somebody like me who went through addiction, who's been homeless, who's overdosed, who like being through all that stuff, and then to find success in an industry, regardless of the industry, but let alone one like this where you could be home with your family and still do it. It's a beautiful, beautiful thing. Marshall, you're right there, man. You're right there. The setups that you're taking, the trades. I mean, obviously, I don't see the backstory. I don't see like what everything, but from a lot of you, Juna, like a handful of you guys who are constantly on. And before you guys, there was another every so often, right? It cycles through. And I think people find success and then they move on or whatever the case. But like Sam and Lenny, like if anyone's remembers them from mostly last year, but the two of them were friends, right? Friends from Europe. They got really close and like they became real good trading buddies, but they were on every single live session like you guys. And then after so many months, they start to find success. And then obviously people don't stay in a group forever. Like you find success, you move on. Yeah, but I'm sure they're doing well, man. It was like them two and a couple other people kind of formed their own little like trading community. Not big. They didn't want to go, but it seemed like the couple of them who were close friends that were all learning from me at the same time, they kind of like stuck together as like a little 5 people, 4 people. I think some of them I might have even connected because they lived in the same, like they're all from Europe. But it was a beautiful thing, man, to see. It's great if you can find somebody who's taking it just as serious as you, like an accountability partner, or like that was the word, that they really became accountable with each other, which is good to see. Yes. Oh, you guys are seeing it now within the couple months. You know what I mean? That some of you guys have been here. I'm certain I see it. I'm sure you guys could see it. The hardest thing becomes the habits, right? Like the bad habits and when you chalk things up and you're just like, I'm just gonna take it. It's been a couple days. I'm feeling this, and then that's what gets people, man. When you start to get careless, regardless of whether it's caused by bad trading, a quiet time of not many trades, things in your personal, whatever it is. But as soon as you start to get careless, it's a really bad sign. Just like at a normal job, once you start just showing up late and not giving a crap, it's time to move. Like you're not doing it right. Like something's up. And so you follow the same mentalities that you do if you were in another career, in another job but if anything, trading should be taken so much more serious because of the power that it carries, of what it can do for your life. Most other jobs don't carry that same type of thing, that same type of power. And for me, I had to see it with all of the failures and like probably 30 something blown accounts in total, which is quite a bit considering in like a 1 year period, I probably blew 20 something prop firm accounts, but I had no idea what I was doing. Was doing them when I shouldn't have. Nice. That's Marshall, that's progress. If you're somebody who, like me, had a really big issue with not being able to trade consistently for more than about 3 weeks. Like I had a wall where for some reason there was all within a 30-day period, something would happen on one day and I would lose my shit and I would end up like I would do really I'd look at the calendar, right? And you see like green, green, little red, green, 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 little red, and then all of a sudden just account gone. And like that's what my history was starting. Once I first got into this strategy, that's kind of where I was at. It was like 1 month or 2 months. And I started to realize, then all of a sudden I started to pass phase ones, right? As I'm trying to incorporate this strategy and not take the crappy trades I was, stop scalping, start doing this stuff more. Yeah, it was like literally that's what the progress looked like. Blowing on phase one, blowing phase one, passing phase one, blowing on phase two, and then again, blow a couple phase ones. It's like you go a couple steps forward, one step back, couple steps forward, but not realizing in the grand scheme of things, you're slowly going up. Even though on a day-to-day basis, you might feel like you went backwards, it's the big picture, right? Like generally, and then you really have to just start picking apart those when you really pinpoint what happened. Like I had to look at, okay, I do good 99% of the time. That 1% that I don't, I lose everything. So like I had to look back and start to focus on what is going on that day. The day that I lose like what ends up happening, right? Something with the trade too leaning too heavy onto the trade, it doesn't go your way, and it's like one bad decision leads to another and leads to it, and then it becomes a snowball effect. And then what I learned to do was pinch it as early as possible. You know what I mean? So when you find what the root cause is and you try to, okay, I don't want to wait till after I make these mistakes to realize it. You make the mistake enough times that you start to pick up on the mental cues and the thought process. What are the thoughts? What are the thought process like on those days that you blow up? How does it start? How does it progress? What is that? And then you become aware, you identify. And then as you're aware of it and still blowing, we've all been there, you know exactly what you're doing, but you can't stop yourself from doing it. Then little by little, you start to work on that fixing and not doing it and trying everything you, like I said, if under leveraging is a great method, if you do have issues, like that's one thing with the emotional attachment to a trade. One is like, is the trade even good enough where you should have been attached? Should you have even been in the trade at all? And then what was your risk like for that trade? Was it that you thought it was so good that you thought it was okay to risk more? There's a lot, man. There's a lot that someone could be doing wrong, and it could, like, the little bit you do wrong can destroy everything you do right. We know that in trade. You could, like, again, you could be this perfect trader 99, but that 1% you do wrong can destroy every single thing you've built up. So, like you said, Marshall, it's progress by holding an account is already, I'm telling you, putting you in a boat that a lot of traders can't get into, and trading for an extended period of time following a rule set. That's, you know what I mean? Although you might not be passing, the fact that you're still on an account like week after week, month after month is actually a really good thing because it shows that you're keeping your cool. You know what I mean? You're not blowing up. You're not saying, oh, this isn't, you know what I mean? Bad trade. Let's risk it all. So it's really good. It's kind of, it does help you know like where your weaknesses, where your strengths are, you know? That's what takes time in trading. You know, you have to be aware of what's going on. There's so many little things can have very large, like butterfly effect, I think it's called. Like a very small thing can end up leading into this whole big, and that's definitely trading in a nutshell. Oh man, this was a nice, overall, it was a nice session in terms of what was talked about today. Like lots of gems. I'm gonna come back and probably clip out half of this live and use it as content because it was definitely good. Yeah, Marshall, it's the truth. Definitely progress. And sometimes that progress isn't making money, but the progress is literally keeping your cool, following your plan. You know, that means you're not doing anything wrong. Just because you don't make money doesn't mean you did something wrong. Losing a trade doesn't mean you did something wrong. It's when you veer off the path that you're doing something wrong because you can make money when you're doing something wrong. We all know, like in trade, you could throw money on a news result, right? News is about to come out. You just shoot some money and it ends up going your way. So you could break your plan completely and make money, just like you can follow your plan perfectly and not make money. So definitely the financial outcome isn't what shows whether, you know what I mean? Like it's what happens once you're in the trade, isn't it? It's the leading up to it and going into the trade that's important. The outcome of it, you can only do your part. We can't control what actually happens with them, but we can control every single other thing, like our risk, our cutoff point, our trade management, our confluences that we use for entry. Yeah, it's slow. It's that slow, steady progress that lets you know that you're doing things right. Like you're lasting longer on accounts. You're not seeing as big a drawdown as you used to. Like those are all little things that you start to notice pretty quickly when you start doing things right. Like, you know, all of a sudden you're not hitting 7 losses in a row. Oh, you know what I mean? That's good. It lets you know that you're on the right track when you see that little bit of progress. Nice. So now, real quick, because I know that took up some time, but absolute gems, man. Definitely gems. Good. I'm gonna highlight the session as well. Like I'll put that it was. There's a couple good sessions that stick out, and I put a little side note. So instead of just saying Monday, June 2nd, you know, I'll mention that. Um, I'll put a note on it. I forgot. I'll have to think of what to say, but I'll try to summarize what it was about in 1 or 2 words and try to just put it in the name so you guys know. Yep, the money will surely come. It's guaranteed. I mean, it's bound to come. You follow the rules and it will. You follow your rule set as long as your strategy doesn't completely suck and you use the right risk with a decent, it will happen. It will. Just like any other career, you can only do the same thing every single day for so long before you get good at it. You know, it only goes on for so long. It might feel like it takes forever, but once you get you know, your strategy, your plan, the way you approach, once you get that stuff down, then it becomes just a matter of simply following it and ignoring everything else. And that becomes its own task in itself. The ignoring what everyone else is doing, ignoring the other influencers that might be doing other things in trading, like, you know, $100 to 1 million. Like a lot of times that stuff just does more harm than it does good. Because I know when I was on my grind in my grind mode, I unfollowed most of those Instagram trader just because I got tired of seeing that type of shit. While I was like tucking my head down, trying to like learn, study, baby pips, trading podcasts. You know, last thing I wanted to see was just people with cars and doing all like, because that's not the important thing. That's not even why I wasn't, you know, I wasn't even getting into it because I wanted all these cars. For me, it was literally a big part of it was being a parent and having multiple kids, having a criminal like things where I felt like I had no other option. Honestly, fell in love with trading when I came across it, but I knew I had to do something out of the box as it was because of the situation I had put myself in. I didn't have once you get yourself into trouble, then you don't have the luxury of a lot of jobs just become off limits. A lot of career paths are shut down if you mess up in your 20. You know what I mean? One mistake. I mean, my mistake was about 13 years long or so, but ultimately, if anything though, it's a blessing and a curse, Yeah, anything that negative that happens to you can be both all depends on perspective. That's in the time being, yes, going to jail sucks, right? Having a criminal back, like all that stuff is horrible, but what you do with it is, you know what I mean? What separates the people who just continue to live the same life over versus the people who get tired of it and move on from it and turn it around. AUD CAD flipped the other way. Let's see. I don't think we had NASDAQ still waiting on. Just want to make sure I wasn't sleeping on anything in the market while we're spilling all these gems. Just want to make sure we didn't miss anything really nice. I just got to do a quick skim through. And the people who hop on the PM session missed out on the good AM session. Like I'll still do the live session later tonight, but I definitely think I got my educational piece out. So usually if one of the day or night, one of them tends to be longer than the other. And usually the day one, just because I'm looking at the market in the morning and then doing it again at night, it's very similar. So the night ones, if anyone's never really hopped on the other session time, they're usually like, between 30 minutes to an hour. And it's really just if those sometimes slightly different people that are there, so that way if they have questions about, I'm there for the other people who can't attend this one. I really wanted that so I could be available for people regardless of your job or what country you live in. You can be a part of the group and still be able to communicate with me on a live, you know what I mean, live form, where if you want to say, hey, I'm looking at AJ, what do you think? But for a lot of times, it's just, stuff I already mentioned in the morning comes up at night. Sometimes there's new trade ideas, but I definitely have always loved the mornings, doing sessions in the morning when the market's, live, moving. But I don't mind doing the PM. Like I said, I like to be available as somebody in my position, and there's so many people who do this and like you just can't get a hold of them. All right, other things. A lot of things flipped in the other direction, which just kind of puts a hold on some moves that were close to happening, like AUD CAD, really close to happening, but we never got that full candle open close to confirm the break. It could still happen, like some of those CAD, what was it, AUD CAD, um, NZD CAD, yeah, they got real close. They just never the break, and that's why we wait for that confirmation though, because you need that candle close as confirmation. Let me just double check the news because I know we got news this week. Monday, let's filter out the yellow folders. So we only see ISM came out slightly negative for the US dollar. Powell's speaking in about an hour. But more importantly, we have starting tomorrow. There's quite a bit of news that comes out this week, but Canada interest rates on Wednesday, Euro interest rates on Thursday, and then red folder USD news every single day this week. JOLTS is tomorrow, ADP is on Wednesday, ISM on Wednesday, then what was Thursday? Unemployment, not so important. NFP is on Friday. So USD pairs on Friday will definitely be a highlight. I mean, with each day having red folder news, all it takes, if we have a couple days with red folder news for the dollar, we should see our trades come to fruition and should happen. What would be nice is if we saw a negative, 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 and come Friday and NFP give us our entry. Because I've taken trades off of NFP before, where it just so happens that NFP is what's going on when it triggers the entry, and so maybe we end up seeing that. Since we have a bunch of red folder news and we're getting pretty close, it's probably going to happen off of one of those news releases. NZD pairs are all kicking. GBP CHF came back down. Actually, G Chef is in flip zone territory with daily 50. Trend failed to produce a new high. It basically did a double top And we had multiple moving averages at the spot that it hit. I know there was daily and I think there was weekly as well. Nice, yes. So weekly tapped the 50, which means that weekly shark fin has fully completed. G-Chef is a good example if you want to look at how many different opportunities, how many trades you can take off of one weekly shark fin. That G-Chef weekly shark fin had multiple trades going up. If you follow it on, depending on as you go through the different time frames, you'll literally see where there was several different entries on your 1 hour, on your 4 hour off the 50, break retest of the 1 hour 50 early on. That trade all the way down here that I had taken, I believe it was trade idea. I know we talked about on the live, it was when you get that inverted head and shoulders or regular head and shoulders with the flip zone with the 50 moving average. This was on the 1 hour. So I remember even the 4 hour, there was an entry at the very bottom, 4 hour divergence 2.0 band. Break retest of 1 hour 50 came after that. 1 hour 50 was in the 4 hour flip zone. Then you had break retest of the 4 hour 50. So like just to look at, like, as much as we say we have to wait, for everything to line up, you could still see how a weekly move getting into initiating and how many different entries you have off of that. The move at the bottom, the 1 hour 50, the 4 hour 50. Then you have, shark fins on the 4 that'll come later, all the way up because that weekly shark fin was good chance it was going to head up towards the closest moving average. Same thing with the daily. Daily divergence gets you to the 50. Might take a while, but it's almost a sure thing. Like the divergence, it's more so I call it the divergence guarantee. The shark fins are trickier because a lot of shark fins have to fail in order to create divergence. So divergence is always more of the final push, or the probability of a divergence working out towards the 50 is higher than a shark fin hitting the 50 if they were at the same exact spot, because there's that greater chance that the shark fin's going to fail and then turn into divergence, and that divergence go hit the 50. So GBP CHF, break retest of flip zone trade, looks like it's on the tables. Once the break happens, again, we will not count the chicken before it hatches because we definitely don't want to do that. But yeah, that highlighted zone is the level of resistance. If we go further back, it was support several times, then resistance, then support again. It was the zone in which the trend flipped, hence the name flip zone. So now we are waiting for the break and retest of that zone. I hope we see this, man, because a lot of these other trades that we were waiting on from last week all ended up flipping the other way. And this is in the same sort of scenario. It's on the daily 50 in the flip zone. All that needs to happen, this daily candle needs to turn bearish, and then we need one more daily candle, open close, pretty much guaranteeing or showing us that trend has changed. We close below, and then we can literally hone in on this. What is this near? 1.10750-ish. So it's a little bit below the 1.11 thousand. So we'll see. Daily 50 is towards the bottom of the box, which is closer to the 500 or 600 level, which might be where that entry ends up being, right? 1.10500. And then off of that, you would probably be able to pull off maybe 1/4 point. So maybe 30, 35 pip. We'll have to really zoom in once we get there and see what that stop could look like. And then probably take it to this. I don't know about that's at least the next from one zone to the next zone is what I'm thinking. Zone to zone, even though, it could have a bigger drop, but at the same time, this looks like a really nice setup in terms of entry. Really nice setup. So I'm gonna keep my eye on this. It's still obviously a couple days away from happening, but so I'll wait to send it as a trade idea. XAU USD. Nice. Gold rocketed up. How about that gold trade idea? I was just gonna say, whatever happened with that gold trade idea? I didn't end up taking it. Like I said, that's why I was like, wasn't sure what happened, but that's freaking gnarly. Nice little inverted head and shoulders in terms of that zone of structure. And what did it hit? 32.75. So I think the trade idea I was originally looking at, it wasn't a 1/4 point entry because of the way structure was, But if you look at where it bottomed out at a quarter point, give or take those couple pips, right? It went to like 271 or something instead of 275, but pretty darn close. It went through the zone of structure and then came. So what else was here? Daily had some wicks, 1 hour. Oh, okay. So it was a little like low time frame, essentially low time frame, but it looks like there was literally just a quarter point. There was a 30-minute 800. May have been tough, man, to catch that. Unless you had to take a stop loss entry, took an entry at one. There was definitely like a lack of TDI at that area. So it was like I liked the zone of structure for buys, but it wasn't confluent enough for me to actually take it. And sure enough, it played out nice, but that's just, you know what I mean? That's the plan. Regardless of how nice the structure is, if it does not have the other components, it just stay out of it. It's not worth the risk. All right, I guess I could take a look at a couple other XAG USD. Dang, how about silver? See, silver did a nice break retest of daily 50. Somebody took silver, right? I don't know if I'm crazy, but I thought there was because I know I had that little trend line drawn, which means sometime recently we had already highlighted or talked about the move off the daily 50. I think someone took it, just don't remember who. It would have been Thursday from that live session. Nice. Yeah. So you had daily 50 and 4 hour 50 retest structure plus, and it was what, 32.6, 32.5. Yeah, almost 32.500. But beautiful in terms of like, again, I'm not huge with the trend lines, but you could definitely say there was confluence right where that 50 was. 4 hour 50 and daily 50 lined up with the nice crisscross. See, like this type of crisscross makes sense to me. And those are one of the only ways I like to, if I do keep a trend line up, or even like the more recent one where you're connecting these. But I need a connecting point is the only, like, that's the main thing. If I'm drawing a trend line, I'm not playing a guessing game with my trend lines. It's literally to connect points. Usually connecting the highs or the lows to a moving average, or you could connect the highs or lows to a 2.0 Bollinger Band, if that makes sense. But a lot of times it's like moving average with the trend line. In a perfect example is like what's happening now, like that sort of trend line break. So you get break and retest of trend line plus break retest of the 50. And like that's a pretty decent combination. Which reminds me of TSA days, because that was another thing Derek liked was the trend line with the 50 MA retest. He also loved this, what's going on right now, because he would find a way to somehow sell that and make it work out. Somehow, some way, he would have a trend line coming from somewhere, and it would end up looking like looking somewhat wild, but it's crazy how they would work out so often for him. Because then it would be like, okay, trend line connecting to resistance with, man, we are flying, right? Did I like miss some articles or something since we've been on the session? I don't know what just happened, but now that I'm looking at silver, I'm like, wait, in the last couple hours, I'll find out after. I'll probably post it on social media. I'm sure I'll see. Even looking at that gold example, or sorry, silver, you have the lower time frame break and retest as well. It's funny though, because we're just looking at the way that those trend lines, like this on the four, and this is almost like trippy how this is happening. You have this 4 hour trend line down the highs, setting up for potential trend line retest with the 50. And that literally same exact move happened on the 1 hour over here. I guess it's actually off the same trend line, but the MA was there. Market broke, pulled back, and that's the trade I was just talking about. It happened on the 1 hour instead of the four. But really nice when you do have multiple confluences at the same spot. Silver actually might pull back. Like we are deep in shark fin territory. On the 4 hour is way up there. The 1 hour way, we're getting shark fins across the board. 30-minute shark fin, every single time frame being a shark fin, except your daily, and we're literally coming into the higher highs. I don't like to guess. I don't like, there's not a good entry point unless you're doing resistance plus quarter point, 32.5 or 34.500, where we're at right now. I would need something else. This is like super bullish to me, and I'm not sure without knowing fundamentally if I missed an article about something. This looks pretty bullish though. Pretty bullish. Trying to sell gold, it would have to look really, really good to take a whack at gold. NASDAQ still interested in if it comes up high, and I think the daily is still looking nice. Our daily bands are still doing their thing, curving. Hopefully price slows down a little because these bands, they'll have time. I mean, unless it just rockets up there, but this is still looking like our flat bands are going to be right at the all-time highs on NASDAQ. And if that happens, I'm willing to participate because we will have daily divergence, daily 2.0 band. It will line up with the weekly resistance. Maybe weekly will do something with its bands as well. That would be really nice. So if it took a little while to happen, and then the weekly bands are flat and the daily bands are flat, that would be a pretty nice picture to be painted. All right, I don't know if there was anything else. I think that's just about it, guys. Definitely a really good session for those of you that were on. I'm going to make a side note for the recording. Trying to think. Anything as far as the trade, any other trade ideas, trade updates, I will keep you guys posted in the Telegram. Big focus, or at least for me, going to be towards content. Content, getting the courses out, the free YouTube course, the paid course, the advanced course that's going to go into the Discord, and definitely some YouTube content that I have to get out. Probably will have to do the editing myself or not do, probably so I won't be super fancy, but that's all right. And then after that, I could really focus more on prop firm and or even trade copier and that whole department. Might even be able to get that stuff in place sooner rather than later. Maybe do a PAM account or regular trade copier. I have to see which way I want to do it. Okay, so any other updates, I'll keep you guys posted in the Telegram. Still debating about this boot camp for July. Trying to think if I do in person, unless I might just do, I'm trying to think, there's a couple different options I'm playing with. Doing them the way I always have, like in person, offering it on Zoom, or maybe I'll do just a strictly online boot camp and just offer obviously at like a lower price, but it would still be a full A to Z boot camp that would last whatever, a couple days, probably a total of 10 or so hours. Normally my boot camps in person last 15 to 18 hours in total across the 3 days because it's like 3 days, 6 hours each day that I normally roughly about how I do them. But if it's only online, obviously that's pretty brutal to have to sit through. So it would have to be broken up a bit more. So if I do it just all online, I'll keep you guys posted either. I'm just trying to playing around with the ideas while I figure out exactly what I want to do, but I will keep you guys posted. Always open to ideas, suggestions, and whatnot. Where are we swinging USD CHF to? Technically, our overall TP on the move is going to be the weekly 50, but that's the big picture. And like we're saying, we might be able to take multiple trades. The safest one for USD CHF is just getting us to that zone getting us towards that weekly zone slash daily 50. Like that's going to be the first major obstacle. We're going to run into obviously low time frame with structure against us, 4-hour 50, 1-hour 50. And then, yeah. So, but because the risk to reward could still be 1 to 4, 1 to 5, that's why I say take that as one trade. And then, if we break this zone and retest it, that'll literally be the trade that we take from the daily 50 to the weekly 50, or from daily 50 to daily 200 is essentially what we're looking at. And that's a big overall. That's 0.84 thousand going to 87,000. Like that's literally what that trade. So that's a 300 pip trade. If we tried to do that all in one trade, it would be like 600 pips and it would probably take 4 months to complete. This pair can be tricky sometimes. You see those segments where it moves real quick, and then you have other times where you're really stagnant. Last time, if anyone remembers this area where we were in this trade for about a month straight, because literally for week after week, each week it was breaking even, like once a week. At one point it would come, then it would go back to being 200 pips in profit, 150 pips profit, boom, come back. Yeah, I remember that one. And I really wanted to swing again on this if it would have hit this spot. Like I remember it did that little daily break retest, but again, that doesn't quite qualify for me because I'm always waiting for that full candle open close. So it wasn't like a significant enough break where I took that, but it was, yeah, potentially lined up really nice. So I didn't end up taking another entry on that, but we still got 1 to 5. So I mean, when you end up with the trade being at 1 to 4, 1 to 5, I really don't try to go past that. And then I don't know if it's a sense of feeling greedy or what. It just doesn't feel. If I know I could break it up into two separate trades and take that 1 to 4, because then you look at it, well, if it doesn't work out, the second one doesn't work out, but the first one does. You still hit 1 to 5 or 1 to 4. And so if the other one doesn't work, okay, you lose 1 R. But if you were trying to do the whole thing in one big trade and then it doesn't work out and you make nothing off of it, that would suck. That would suck. So I would rather, if you could, break up those weekly, monthly moves into several smaller ones. That way, each smaller one is on, daily 4 hour combination, but each one is like 1 to 4, 1 to 4, 1 to 4. So if you end up getting that opportunity, because we're looking to go all the way up to 87,000, we're at, close to 81. So we have 600 pip zone. And so there's good opportunity where we might be get several 1 to 3, several 1 to 4s within that zone. So weekly 50 is the final overall TP. And that is because the weekly has a shark fin. If the monthly did, which I don't think the monthly did anything, but yeah, if the monthly had shark fin or divergence, that would be different. Then you would be, so like you look at those examples, when the monthly made shark fin divergence, you'd be looking at taking it towards the monthly 50. Monthly break retest of the 50, where do you take that? The monthly 200, just like any other break retest of the 50 towards that 200. Break retest of the 50, that gets you towards the equal level low. We saw that, and then the other 50 got to a lower low. So let me see. USD CAD is the other one, right? I got a key. I'm gonna have to set alerts. So I'm probably gonna set an alert on USD CHF when we get to 81,300 or 4. Like I know we're close, but that's already where I want to, because I don't know, we could be above this spot for the rest of the week for all we know. But I definitely want to pay attention if we start to get within like 30 pips or so, because USD CHF generally is pretty slow moving, but definitely want to keep an eye. And like the session tonight, we'll see where we're at tonight, and I'll kind of reiterate if it's safe enough to put a stop, or if you're going to do a limit order, what that would look like. USD CAD. Now this guy, we don't yet have the weekly shark fin, and that's what kind of sucks, but yeah, this one, man, I don't even know, because of how bearish USD CAD is shifting. We were actually quite bullish for a while, and then we had this nasty drop. We broke some really significant levels for the big trend, right? For that weekly, monthly trend, like this spot was pretty significant. Big block of resistance that held up for several 3 years, and then, broke above, failed to hold for buys, ends up flipping to the other side. I don't know about holding past this, to be honest, because that's going to be a tough block to work through. Even though we were saying maybe it can end up coming here, but that weekly 50 could be trouble again if we hit it. I wouldn't try. Like, I hate that the weekly doesn't have TDI, because it makes me not even want to use the weekly for anything, because it doesn't have the TDI to go with it on that time frame. Daily, okay, daily divergence, we take to the 50. So if you're generally, if the daily is the largest time frame that has confluence, then we might just look at it as from the daily 800 to the daily 50. Give or take, right? I say roughly the 50, but if the 50 comes down to a lower spot, then you might have to slightly adjust, which is definitely why you want to shoot for higher risk to reward if possible, just in case something like that happens and we have to move stop. So what are we looking at? So even for USD CAD, we're looking at roughly 300 pips at most. Most likely this daily 50 is going to come down, so we're probably going to end up looking at 200, 250, which I think is that's definitely given that 50 quite a bit of room to travel. And I'm basically then bumping down from that structure point, or, obviously this one's a bit too high and we know that 50 is going to come down a little. So I would then be looking at maybe something like this spot. the smaller box like here, that becomes the spot where we might have to potentially, you know, partials definitely want to be protected once we hit structure going against us. It might even be lower that we have to protect. Which even this isn't, in terms of, that's still like 80 pips in profit or 100 pips in profit if we got all the way up to here. In terms of the trade management, I like this though, 200, roughly 200 pips. Even though we think it could go a little bit further, this is relatively safer. So it's also 4-hour 200. Yep, and then so exit would be right before we hit 4-hour 200, right before we hit what was it? Daily, yeah, definitely before daily 50. Yeah, so since daily is the largest time frame that has TDI, I would say then we play it by the daily. That's the rule of thumb, Marshall, that I followed that for years generally. That I've been doing for a while. Like whatever is the highest time frame that the TDI move is happening on is the time frame that you would expect it to play out on. But I think that also makes a lot of sense when you think about it. Like a 4-hour shark fin, you know, you expect it to get towards that next 4-hour 50. You're not going to say the 4-hour shark fin is going to go all the way to the weekly, whatever. And then you look at the weekly and it would make no sense for that to happen. So your safest bet and what I've generally been following for years, like that's one of that's part of the methodology that definitely hasn't changed over the years. I wouldn't even say anything's really changed. I've just gotten more advanced with structure, with zones, with flip zone, you know, really incorporating structure better is how I would say I've changed over the last year or two, is my understanding of structure got a lot better. And quarter point became a bigger thing. Not that it was ever a small thing, like, because I've been trading quarter points for a while before I was even teaching. Like when I was still, before I even learned this strategy, I was doing quarter points on US 30 when I was only trading US 30 and started to play with those quarter points. But yeah, then it didn't take long of sort of realizing just how perfect quarter points and I don't know, it still blows my mind, man. Like the knowledge that or the lack of knowledge about something like that that's generally simple, but how many people don't even think about the numbers, you know, that don't, you know, you do these trades constantly, not really, everyone's always based off zone, and it's crazy how many people it flies over your head. And maybe it's pattern recognition, I don't know what it is or how it even stuck out to me. It just, after a while, I started to realize the numbers at which all my TPs take profits, when I was losing trades, what they ended up going and hitting to. So part of the reason I may have picked it up really well was also because I analyzed my losses. Like I said, if I lost, I wanted to know, well, what did it end up hitting then? If it went through my entry, then what the heck did it bounce off of? Did it go right through or did it hit something else? And then you start to pick up on it. And lo and behold, then you find it's pretty close to a cheat code, but not quite. You know, it's one way because you literally can turn structure zones into specific points, which in itself is pretty remarkable. And it's not the most complicated thing in the world to do either. And you throw a little bit of common sense. Not everything is a quarter point, but you guys see that just about every trade we take is centralized around quarter point, a moving average, you know, multiple time frames. All right, that's all I got for today then. So I know definitely a good session. Appreciate you guys hopping on and staying on with me. Definitely appreciate it. Appreciate the support from you guys. I'll keep you guys updated on any other updates. No problem, guys. Again, I hope some of you guys who wanted Euro GBP were able to get in on it because that thing hit remarkably well from what was posted. Hopefully this week we end up getting another nice one. USD CHF, definitely one of the primary targets. G-Chef, I really like that one if it happens. Go. Then the next couple days we should know which one of those we'll be honing in on next. All right, enjoy the rest of your day, guys. Trade safe out there if you're in anything.
Yeah. I spent all this time searching for another life. Had me turning on my purpose, I did nothing right. Sometimes it takes the dark to get you close to light.